Welcome back to Liberty and Finance. We're delighted to have this week's returning guest, as always, on Tuesday evenings. It's Andy Schectman with the weekly market update. However, this is a special treat because it's a live stream, and it's awesome that we've got so many people in the live chat already starting to ask questions. A lot of the discussion in there has been about what the markets are doing today. Before we talk about that, Andy, welcome to Liberty and Finance.
Always great to be back, Don. Again, good to see you, buddy.
Likewise. And my son, Elijah, who does all our technical stuff, actually did a training lesson for me today on how to do live streaming. And I recorded it so I can look at it again when I forget. So this is the younger generation teaching the older generation how to use technology. Okay.
Well, good luck on that.
Yeah, thank you. All of our enjoyment of this evening depends on it here. So anyway, I was about to mention that today was touted as the worst day on Wall Street in the past 2 years. And that's saying something, given that we've been through a pandemic and global lockdowns and who knows what all. But that's interesting because I keep getting couple after couple after couple calling me and saying we want to get our nest egg out of harm's way. And it's been all the way from very, very small, modest amounts up to multi-family trusts where they got 5 trusts in the family and they got to get them all out of there. And it's a remarkable time. And anyway, that's what a lot of the chatter has been about in the live chat, has been about what is going on with the markets. And people have been mentioning that they saw you interviewed on Vic's Weir show and talking about what's coming next. So without any further delay, I just wanted to give you a chance to give us your take on this eventful day, the worst day on Wall Street in 2 years, and then we'll go ahead and get into viewers' questions.
Look, man, look, it's long overdue. I mean, the valuations that we see in equity markets are or have been for quite some time stratospheric, and I think that the way the CPI numbers came out today and the belief that the Fed will raise rates again by 75 basis points or 100 basis points, whatever it may be, has spooked the market. But one of the things that I always find interesting about the market is just how reactionary it truly is. And that, I think, is a mistake when you're talking about investing. And you look at the Chinese, they think in terms of decades, and we think in terms of seconds here in the West. And you get information that everyone really deep down, I think, understands has to happen. We have to see rates rise. And you see some numbers that make it evident that they're going to continue to tighten, they're going to continue to raise rates, and the market has knee-jerk reactions. I think you have to be proactive. We've seen for the last several weeks insiders selling at record pace. The insiders are selling on strength, and for whatever reason, hope springs eternal in the equity markets. And look, it's been that way for a long time. And I think recency bias makes most people believe that just hang on, have strong fingertips, and it will all come back. It'll all be okay. This time, I think it's different. And I think that the floor really is a long way down. It may not be this move. Maybe it is. I don't know. But price discovery and valuations have been distorted to the umpteenth degree, where more money created in the last 3 years than in the history of this country, the majority of it going into equity portfolios, into real estate, into cryptocurrencies, where people have become, I think, they've drank their own Kool-Aid in the respect that I know that this house that I bought a year ago or 18 months ago or 15 months ago really is not worth twice what I paid for it. Yet that's what the real estate agents in this neighborhood would have you believe. And I know for the same, by the same token, that equity portfolios are not double what they were 3 years ago in terms of fundamental strength. Mm-hmm. This is just a situation where I believe prices have gotten so far out of whack that they really do need to come down. And I think even though it was a big move down percentage-wise, it wasn't that extraordinary. I think that there'll be many more days like this. whether it be by the Fed tightening and the reactions to the market, or as I've been talking about for a very long time, ad nauseum, something that happens eastward that makes the market move in and of itself, where the market and the real market controls the price movement and the action, not the manipulation of the commercial banks trying to mitigate the rise or the fall of assets. So look, this is long overdue, Dunnigan, and I think there's going to be many more of these. And I think people just need to get the heck out of the way right now and let this all calm down. And if you have money in the markets, there's nothing wrong with sitting on the sidelines. Whether or not you believe you should be in precious metals is not really the issue here. The issue is that asset prices are distorted and they need to find equilibrium with interest rates. And even interest rates, if they raise them another 100 basis points or 1% to 3.25%, we are still, based upon the current CPI numbers, we would still be negative real terms over 5%. There's a long way to go to find equilibrium in this market, to find rational interest rates, and to, when you are receiving a negative 5% return on fixed income investments, we have a long way to go. And I think, this is just the very beginning.
We've got some questions already from viewers. I wanted to see if we could field a few of these right off the top. First, I think your reputation for the drum that you've been beating now for, well, I don't know how many, if it's been at least 2 years 2.5 years that we've worked together, is there just keeps being so many things that are coming true on that one of the viewers here is saying that Andy looks like Moses coming down from the mountain with the tablets. That's Rob Schroeder. Andy started to look like Moses when he came down the mountain with the tablets. It's like, and it isn't an I told you so moment. It's a, guys, I've been trying to share everything that I can with you. And so I guess if you can come from that just for a moment about where you've been coming from and where you still are coming from.
Yeah, I mean, there was an article that came out the other day by a man named Sergei Glazyev, and he is involved. He's the Russian minister in charge of integration and macroeconomics for the Eurasian Economic Union. I mean, basically, you're talking the BRICS countries. You're talking about this new conglomerate of countries that is coalescing against the West, and it's become more and more and more and more obvious and evident to me, really, that this is something, a trend that is in motion and that is not stopping. And he came out and said, I'm going to read something here because I think it's very important. It really crystallizes and undermines everything I've been saying to you. And that is that he laid out fundamental principles upon which the new post-US dollar economic system will be based. Although some common unit will be agreed upon, it will not be based upon any particular currency, as with the Bretton Woods order, but rather a market basket of local currencies tied more deeply to an array of real commodities, such as gold and other precious metals. So what you are seeing here is exactly what I've been talking about, a coalition of up to 90% of human population against the West. And they are going to use, I believe, the distributed ledger technology, let's call it a beta test of the Chinese digital yuan, which has worked flawlessly for over 3 years to the tune of north of $20 billion in successful transactions. I believe they will use that as the rails for the new currency that they've already announced. The BRICS nations have announced that they will issue a new world reserve currency. And here you have Sergei telling us that it's going to be pegged to commodities. Now, if you look at the European Union and ask yourself, well, why did that fail? How is this not going to fail with all of these countries? One of the things that he talks about in this article is this coalition of groups, even those groups that have feuded for a long time. He's talking about mending offenses between Iran and Saudi Arabia. He's talking about a railway between Iran and Iraq. He's talking about all of these countries. You know the old saying, my enemy's enemy is my friend. You're talking about this entire network of countries that is standing up to the U.S. hegemony, and it is becoming more and more and more obvious. You have this deal called the I can't even pronounce it, the Tunxi agreement that was just signed in April. And it's between Russia, China, Pakistan, Afghanistan, Iran, and several other countries that I can hardly pronounce. It all end in stan. You know, just between Iran and Afghanistan alone, do you see what they're doing? They are coalescing against the West, and the rallying cry of the Western hegemony, the hypocrisy of the West, the tyranny of the West is what they're all coalescing together upon. And it's becoming more and more and more and more obvious to me day by day by day. And, you know, I think that is where I'm coming from. I think that the Fed and the talk of a 100 basis point rise in rates is just a whole bunch of sideshow nonsense. I really, truly do believe that. And again, I think that the real target, what everyone needs to keep their eyes on, is indeed this coalition of countries that is lining up against the Western hegemony. And I think the hatred of the West, and maybe that's a strong statement, maybe it's not, is more cohesive to this group than centuries old feuding. And I think that's an interesting thing. Now, the European Union failed because, you know, there are a lot of countries in the Union, or part of the reason it's failing is because there are countries that don't pull their weight. Some in the West do more than some in the East, and vice versa. But as Sergey pointed out, this is not going to be anything like what the Bretton Woods Agreement was, or anything like what we've seen in the European Union. This is going to be based upon commodities. And I think it will be pegged to a distributed ledger that the Chinese will roll out and back, citing the successful beta test of the last 3 years. Even in the Winter Olympics, you had to use your cell phone, and it was the digital yuan that you were using. So they will use that successful beta test, if you will, as the rails and the backbone of a new currency to which they've all announced. And Sergey here, who's really in charge of putting this all together in many respects, or part of the group that's putting it together, is saying that, you know, this is going to be backed upon or backed by commodities. And I think really that's the issue here, is that, you know, gold and silver and all of these things that these countries are accumulating in mass. And I say silver, look at the Indian import numbers are off the charts, but look at the amount of gold all of these countries are accumulating. And it is going to be pegged to a new, I believe, to a new distributed ledger technology that every single day we see articles that make me believe more and more and more and more that this is the path that we are on. And then you throw in the new Russian platform that is being proposed for precious metals, for pricing precious metals, which to their own admission would be to break the grip that and the manipulation of the Western markets, both the LME and the COMEX. Now you put all of that in context, as we've been talking about this over and over and over and over again, really for the last few years. And the interesting thing is that every Saturday or Sunday when I start preparing for the next week conversations, there's another story and another story and another story that fits this progression of events. You put all of that together and you look what's happening right now on the exchanges around the world, whether it be the LME, which has the lowest amount of silver held on it in the history of it. Really, I mean, they're draining the LME, they're draining the COMEX, they're draining all of the exchanges. Over 100 million ounces pulled out of SLV in the last 4 months. Massive drawdowns in gold and silver on both exchanges, the London Metals Exchange and the COMEX. And then you see the commercial banks, for the very first time I have ever seen in 33 years, are net long in silver. They are net long over 5,000 contracts, like 5,100 contracts. Now, if you just look at the banks themselves, so one of the things in the Commitment of Traders report is that the commercials are lumped in, the banks are lumped in with the producers. And the producers are the ones that legitimately hedge. The producers and the companies like myself who use the COMEX to legitimately hedge, they're lumped into the commercials, because a commercial is a non-commercial is someone who has no interest in hedging or protecting against price swings. They're just doing it for investment and speculation. So if you just look at the banks and not the producers, those numbers are much greater. The commercial banks, which I will tell you are the most sophisticated, well-funded, well-informed traders on the globe, are going really long. And we talked about this a couple of weeks ago, that I believe they set a bear trap for the hedge funds, who are massively short and getting shorter. And when they go short and when they sell their longs, the commercial banks take the other side of it. You put all of this together, you see a de-dollarization, a growing de-dollarization, unions that are being made, usurping the dollar, coalescing against the West and the Western hegemony and the perceived hypocrisy of the West. And I can see why they would think that about us. And they are using that as a rallying cry. At the same time, you are seeing record imports by the commercial banks, record drawdowns on all of the exchanges. And now the commercial banks, who always win the war, are going net long. Something is coming down the road, and it's bigger than anything we've seen in a long time. Don't know what, don't know when, but you can see by the positioning of the biggest money in the world that they are expecting something to come here pretty soon.
Yeah, you mentioned several times during that section when you talked about the medium of exchange needing to be based on commodities, and the countries that are coalescing to agree on that are producers. And when I interviewed Bill Holter just a few days ago, he talked about that. He said, this has gone on too long with the West. That's pretty much the United States and Europe, basically outsourcing all of their manufacturing to Asia and other countries, and then sending them dollars in exchange for real things. And so we end up with a bunch of consumer goods, which are all now expired and thrown in the landfill, and they have all these trillions of dollars. And now we're seeing they've been using this opportunity of low prices on precious metals to accumulate those, but they've also been purchasing up things like real estate and farms and ranch land and everything in the US. So it seems almost cruelly poetic justice when you have a country like China that takes these long-term views of things, a 100-year plan rather than the next 3 months plan, to take all those paper dollars, turn around and buy out the land from underneath our feet. There's quite a debate raging in some states about whether that should be permitted or not, but so far it is being permitted. And that's that principle that you talked about of the countries that are coalescing in the East are producers. They have natural resources, they manufacture things, they produce things, they've got strategic commodities that the world cannot live without. And you've got Europe and the US just taking these ideological stances about how we're going to put price caps on natural gas from Russia, and we're going to do all this stuff, and using the might of the last, the Bretton Woods dollar. We've gotten used to being able to just say things like that and get away with it. Sounds like, in your view, those days are coming to an end.
Yeah, very much so. And look at the term, the fallacy of composition, where, whether you're talking about all the pieces that I continue to put together in and of themselves, whether it be tier 1 revision in gold, accumulation by the central banks, accumulation by the commercial banks, all of the items that you talk about in and of themselves, okay, whatever, but you put them all together and they have a much greater meaning. And look at the main argument you get from people about this ideology that I have, this thought process I have as well, the dollar is the best currency. There isn't an economy that is better in it. Okay, I agree. It's the prettiest horse in the slaughterhouse. Okay, fine. You talk about military might. Yeah, we're the strongest military in the world. But look at the coalition of all of these countries. And now you're beginning to see our allies sign up with the BRICS, including Egypt and Turkey, and Mexico is signing up to it. How about the fact that, we've talked about this, all of the OPEC producing countries, every one of them are in the Belt Road Initiative. Mm-hmm. 6 of the 7 of the OPEC countries are in the BRICS and or signing up for it. The 7th, United Arab Emirates, just signed up with the BRICS banks. All of these countries together, whether you're talking military, whether you're talking GDP, whether you're talking an economy, all of it are stronger than the West. And all of those countries, if properly harvested amongst themselves, are backed by commodities. And where the West is all about debt instruments and and really nothing substantial backing it. So yeah, I think this is a trend in motion, and it's interesting. You're beginning to see a lot of people talk about it now, and no one was talking about it when you and I were talking about it over a year ago. And now everyone's talking about it, and quite eloquently. Guys like Alistair McLeod, they're talking about it, and it's becoming more and more and more obvious to everyone. I don't know why this was so obvious to me. I don't know, but it has been. And maybe it's because I've been looking down this thread. Maybe I got lucky when I realized, why the hell are they reclassifying gold tier 1? What the heck is this all about? And seeing, why are the banks repatriating their gold, the central banks, and putting these threads together and following that thread. Oh, wait, here's another piece and another piece and another piece. And when you lose the petrol reserve standard, which I believe we will, when you see OPEC or Saudi Arabia joining the BRICS nations, when you see every OPEC country on the Belt Road Initiative, and we are not part of it, you see this expansion, and they're now expanding into countries like Afghanistan. They're expanding into countries that hate the West, and they will use this rallying cry and this cohesiveness to build an infrastructure that is going to be very, very hard to challenge on every single level. I'm very concerned, and I think everyone should be as well. I really, truly do. The West has, I think, is very close to its final chapters in its historic dominance for centuries, and it's now moving eastward. Most of those countries were third world countries for the last 100+ years, and now all of a sudden they are gaining strength in military, strength in economy, and most importantly, strength in unity. And they are, I think, going to be a formidable foe. And this is the thread that I've been following, and I have never been more convinced that this is the path that we unfortunately are on.
In addition to the humanitarian crisis that could come from energy shortages this winter, for example, in Europe, for one, there's also been talk about whether an energy crunch in Europe, for example, the spiking electric prices that have caused shutdowns of some major steel plants, that sort of thing, because they're not economically viable with these multiples of normal energy prices, whether that will also impact smelting, refining, that sort of thing for precious metals. Do you have any insight? Just as we found during COVID, there was one point, I think, when all the Swiss refiners were offline at the same time. We had COVID shutdowns of multiple mints, that sort of thing. It really disrupted the availability of precious metals. Do you have any discussions or have seen any information that would lead us to think that the spiking energy prices are going to be yet another cause for disruptions in availability of precious metals?
No, I haven't, but it makes sense. And whether it be a spike in energy costs more money to pull it out of the ground, or a spike in energy when you're talking about the inability to efficiently refine it and produce it, I haven't. It makes sense. But like we talked about on our market update the other day, the impromptu one, there are so many things that just pop up. Everything that I talk about is really macro in scale. When I talk about the product disappearing, ultimately, a market defined by the inability to source product, as I always say on your show, I'm following Rick Rule's logic in that 0.5% allocation to metals across the whole financial matrix in this country. When that becomes 5%, it's going to be impossible to get product. That's a tenfold increase in this industry. Cannot handle it. So that's what I'm thinking. But look at the micro side of things. Queen Elizabeth dies and everything goes way up in price and is becoming harder to get. Something like that no one would think about, that would change the dynamics of the market, will happen. And so, look, supply chain problems are probably only going to get much worse. And, look, at one of these times we see a market really sell off. You've had a Federal Reserve that has come in every time the market should have cleansed itself, like a forest fire, but instead we come in and put out that fire, and the Fed does, and it's created a greater and greater distortions. One of these days, and maybe this is the beginning of it, you'll see a market sell-off, a real one, that'll wake people up, shake them to the core. They've already looked at their 401ks are down considerably over the last several months, but it'll really shake them. A bear market, often will bleed little by little by little by little. And there'll be bear market rallies, and it'll bleed and it'll bleed and it'll bleed. And the rally will suck you back in. Okay, it's all over. Get back in. It's all good. And then it'll fall some more. Then bang, it's going to fall really hard. And that's the kind of thing that'll wake up the public. And when the public awakens, where do you go? I mean, where do you go? And, you know, people are saying, well, you can buy, you know, 1-year treasury earning 3%. Great. Well, you're going to lose 5% purchasing power. It's not a good investment. Where do you go? You know, and I think that that's the real issue here, is that all of these assets not only have been blown sky high in a make-believe monetary environment, but they're all inversely correlated to a rise in rates. And that's the thing people need to understand. And if these things happen where the East starts to forsake the dollar, look at all of the agreements that have been struck across the globe that no longer use dollars, like from India, where their largest trading partner, now they're using rupee for domestic and international trades. All of these trades between countries that used to settle for energy in dollars are no longer settling in dollars. They're settling amongst multi and unilateral agreements forsaking the dollar. But if that one switch happens where OPEC says, hey, it's been great, but we're now part of the BRICS nations, we're part of the Belt Road Initiative, this represents 90% of human population, and we're going to open up oil purchases to other currencies, maybe currencies that are backed by commodities, not that are inflating away the value of the currency. And we're gonna move in that direction. Thanks a lot. And when that happens and those dollars get dumped and interest rates spike, that'll really wake up the public, and that'll be an awful experience. But where do you go? And so farmland, yeah, why do you think Bill Gates and the Chinese are buying it? Might be the only other place that I would put my money right now than precious metals. And who's buying all the precious metals? Oh yeah, it's the Chinese. So the biggest money in the world, the people who are thinking long-term, the people who are playing chess, not checkers like we are, they're positioning themselves for this event. And most people here don't have a clue, partially because our media is pathetic and our media doesn't tell us anything that's really important. Every time I give this speech that I've been giving lately at conferences, or I just did one in South Dakota, similar to the one that I gave at Rick Rule's event that you saw, I started out by saying, look, there are 5 mileposts here that I'm going to talk about, all of which I've talked on your show. And I want you to think, how many of you know this? How many of you even heard of it? No one knows gold was reclassified tier 1. Nobody knows about the Belt Road Initiative. No one hardly even knows what makes the dollar the world reserve currency. Few people, if any, know that Saudi Arabia has expressed interest and more or less already acquiesced to joining the BRICS nations. All of these things that are happening that will have profound effects on our lives, and especially on our children's lives, are really widely, completely unknown in this country. Most people can't write a check for $5,000 to pay for a root canal or a blown out tire. Most people are living paycheck to paycheck. And with inflation running at 40-year highs, most people are being bled dry of their savings. We are not prepared for what's coming down the pike, Dunnigan. And, you know, every single day I get more and more convinced this is happening. And it's a curse. It's a curse because I want to help people, and you know, it's cathartic to come and talk to you and the people who watch your show who understand this and are preparing, but they have the same curse that you and I do, and that is trying to help your friends, trying to help your family is a awful experience. They think you're a nut job. They think you're crazy. Why would I do this? They just laugh. And when it happens, it's not going to be something that I will take any delight in. Like you said, it's not going to be I told you so moment, but it's happening, and I think people need to wake up because it's really happening, and it's actually increasing in speed. And it was the weaponizing of the dollar that I think put this into overdrive. And I ask people this question all the time: if the United States was Russia and Mexico was the Ukraine, and we were in a war with Mexico, and Russia provided $90 billion, Stinger missiles and drones and intelligence on where to drop the bombs, and then froze our assets and kicked us out of the international SWIFT system, is that a declaration of war? And I think things are happening, and yet we don't even realize what we are doing, how close we are to World War III. And the worst part about it is that we think these sanctions are having an effect on Russia, yet 80% of the world is doing business with Russia right now, and we're not. I mean, we're asleep at the switch. And then we have the nerve to go to Saudi Arabia, supposedly, and ask him for more oil. That's not why he went. When we say we're going green in the next 20 years, we're going to destroy the way of life of the Saudis. We're going completely green. We're getting rid of fossil fuels. At the same time, they make this announcement in California. They tell you not to charge your car, even though we're all going digital. I mean, we're all going battery-powered vehicles. But he went to Saudi Arabia to beg them not to join the BRICS, because when that happens, it's game over. And it's going to happen on a Sunday night. We're going to wake up on a Monday morning, and the dollar won't be the world reserve currency anymore, or at least not the petrodollar any longer. And that's when things get really, really scary. And that's when my prediction about you won't find anything happens really fast. And if the queen dying is enough to dry up all of the coins with the queen's face on them, when I run out of what I have, what's going to happen when the markets fall 5,000 points or 7,000 points or more? And I think those days are coming. I wish to God I didn't feel the way I do. I really do. I hope I'm wrong. I hope I'm wrong. And if people 5 years from now say you were wrong, I'll take pride and joy in that, because my children will grow up in a better world than I think they're going to grow up in. But I am telling you right now, if you are not a contrarian, you will be a victim if this stuff plays out. And it's time to wake up and realize this is what's happening.
Yeah, my wife and I were just talking about that today. She said, our gravest concern that we have is not for ourselves. It is for our children and our grandchildren. What kind of a world will they have to live in? It will not be like the one that we grew up in. And you know,
you see me getting more and more wound up about this, because when you and I started talking about this in 2020, it was not even the Belt Road Initiative. It was the Tier 1 revision of gold. Why did it happen? And why did all the banks repatriate their gold? Trying to figure it out. And then Nancy Pelosi says, well, you know, viruses can live on currency. So I said, oh, a digital currency is coming. And then from that day forward, the Belt Road and all of these things, one by one, that keep happening every single week. There's a new story that goes along with de-dollarization and coalition of all of these countries. And the US is very conspicuously not part of it. And I think these countries are basing this coalition not just upon the mutual dislike of the West, but also a whole new system based upon commodities and transparency and honesty, the way that it should be done, the way that markets should run. And what better way to roll out distributed ledger technology than to peg gold to it and issue a new digital currency? It won't be open source. It'll be a private, permission only blockchain, but they will show what has been pegged to it. And maybe Saudi Arabia pegs oil, and maybe China pegs gold and or rare earth metals, and Russia pegs platinum and palladium and gold. Who knows? But you will see it on the ledger, and I think that's the road we are heading down. And it will ultimately be necessary to ever challenge or ever come out as a world reserve currency, as the BRICS nations said that they are going to do. As Xi said, we are doing this. Here it comes. You have to peg it. You have to peg it and show the world that, hey, we're going to break the cycle of governments always choosing inflation over austerity, always choosing the printing press over the tough decisions. And very quickly, that will be something that will immediately gather a whole lot of attention and a whole lot of credibility.
We've had a lot of questions in the chat stream as you've been talking. First of all, a lot of people have been really appreciative of you being so forthcoming. They really are appreciating your candor tonight. And that's not unusual. That's why they like to come and talk to you on Tuesday nights. But you're talking about how difficult it is to convince family members or friends or acquaintances or coworkers, whoever, who see these bear market rallies and get all excited about now it's time to get back in again. Like, they really don't understand the fundamental breakdown of what is happening here. Frankie Carbone says, family members of mine are thinking of getting back into the stock market. It's like talking to a gambling addict. We had a person, he's off screen, and I can't pull back that far because the chat stream has gotten so far. I've tried all the way, can't get to the top anymore. But he said, I made a convert today. He's going to buy a monster box of Canadian maples. I've had 2 clients call me today, both talking about, what do I do? What do I do? Tell me what to do, because they've been hearing so many different stories about the real estate market's going to roll over, or interest rates are going to spike, or they're not. We're going to go into inflation, deflation. People are frankly bewildered. Most people have no idea. Either they're just sleepwalking, or they really are confused and don't understand. There's been a general generational loss of understanding of what real money is. I talked with Rafi Farber just yesterday. We're going to post that later this week. He talked about that. People don't understand what real money is. Bill Holter said the same thing. But those who are waking up do, and they know that there's a way to get out of harm's way. Everybody's going to get hurt to some extent. Some people, there will be outsized opportunity, asymmetrical opportunities, that sort of thing. That's how David Smith, rest his soul, we just had a tribute for him yesterday, talked about this. There will be asymmetrical opportunities. So it isn't all doom and gloom, but it is serious. And you've got to position yourself in a place of relative safety, because many places are not going to be safe. Rick Rule told us 3 months ago, buckle up, volatility ahead. The swing, Mike Pento said the swings are going to get wider and wilder. So people who try to do bottom picking and top picking are going to find themselves just whipsawed all over the place. So in an environment where it's so confusing, if you apply the old paradigm to the new environment, it doesn't make any sense. Nothing works anymore. And that's where you're saying, folks, wake up. The paradigm really has changed. You need to look at this through new eyes to see it correctly. And then you'll understand where we're going.
Yeah, you have to. And you have to realize that we're in uncharted waters, and your gut is your best financial advisor. I don't want to paint a broad stroke on financial advisories. And every time I say what I'm about to say, I get a lot of angry emails from financial advisors. I'm not like this. I'm not like this. But they used to be called stockbrokers in the 90s when I started in this industry. And they made money on trades. And now you get free trades. And so they make their money by keeping your money under management. And so when you come to them and express your concern about, hey, I'm really concerned. I want to put some money into gold. I want to pull my money out of the market. I want to get out of harm's way. The response is typically, you don't want to do that. Why would you do that? It's adversarial. People call me, they're afraid to call their own money managers. Look, these are periods of time that most money managers, just about every one of them haven't, all of them, they've lived through nothing but good times, more or less. And I think this time is different. I think you trust your gut. I think you get out of harm's way. I think you take accountability for your actions every day. Why not take accountability for your finances? And it's time. It's time to do that. It's time to realize that, all of the best laid plans need to be reevaluated from time to time. And this is one of them. This is one of those times. The Federal Reserve and the US government so badly, horribly distorted price discovery and asset values that I think people got really excited that they became wealthy over the last 2 years without doing anything, watching their 401k and their house price go higher. And this is a very dangerous thing. It really is, because I think they're going to be reluctant to believe that the continual bleeding of values is anything but a short-term correction, because you look at 2008 and it was the same horrible thing, and yet everything came back. Well, why did it come back? That's the part that people aren't missing. All you hear from these advice, well, everything came back. If you just would have held on, you would have been okay. The Fed balance sheet went from 800 billion to $9 trillion over the ensuing 12 years. All of that investment went into treasuries and mortgage-backed securities. Both of those investments drive down interest rates. When you drive down interest rates, you create an illusion of prosperity in what? 401ks, stock portfolios, and real estate. And then you put the $6 trillion icing on the cake. And most of that free money went into assets where hedge funds can borrow money at next to nothing and plow it into equities and real estate. And all of these assets make a fortune, cover their 1% loan, get huge bonuses. And you have asset prices in stratospheric level that when rates rise to where they should be, not set by the banks, but set by the market, everything is going to be awful. And it's going to be very frightening when this happens. And I'm convinced, I truly am convinced that it's going to happen, not by the Fed. The Fed's going to raise rates high enough to where there'll be talk of them coming in and stopping and easing. This is why you see the inversion of the yield curve. But the Fed is a sideshow. I think the market and the worldwide market and the worldwide realization that holding dollars is a sucker's game, holding treasuries is even worse. And that is what is partially incentivizing, along with all of the things we've talked about, the need for a sound monetary system. Well, it's going to come by hook or crook. And I think it comes over there before it comes over here by default. And this is the great reset that Klaus Schwab talks about. When it happens over there first, that means dollars get dumped in mass and all end up on shore here with interest rates spiking. And it happens immediately. And this is why people need to be proactive. If you have this gnawing feeling in your gut, get off the toilet or get on it and do what you're supposed to do, I guess you should say. Do it or get off. You know what I'm trying to say. I just simply mean, if you have this feeling in your gut, don't say, damn it, I knew I should have done that. I knew it. I saw it. I knew it. How many times have you all out there said, I knew I should have done that? I knew it. I felt it and I didn't do it, whether it be about relationships or business decisions or anything. This is the time to trust your gut, because financial advisories are no more in tune to what's happening than you are. In fact, they're probably less in tune, because many of them, not all of them, I work with some very good ones who really are in tune to this, but a lot of them know more and more about less and less till they know everything about nothing. And they think the road to retirement is only paved with tight grips on mutual fund stock certificates and a 40% bond allocation. Well, I got news for you. If what I see happens, those are the portfolios that get crushed the hardest.
You mentioned a little while ago about the passing of the Queen last week. I understand you got some tips. We had you on briefly later in the week to talk about how companies and individuals were scooping up coins that had the image of the Queen on them. And now those are becoming hard to get. Premiums are spiking up on those. You've still tried to hold down premiums on some of those that you had in stock already.
Yeah, I have. And Queen Elizabeth will no longer be on any of the coins moving forward. And so I think it's me, the King Charles, I guess, moving forward. Yeah, they have. And it's a situation where a lot of people believe it'll be a collector's item. So the Britannias that we're offering at 5.25 over spot, I gotta believe that's the best price in the country on 2022s. I really do try. Then again, I really do try to make it a special when I call it a special. This is, and the Maples too, right? So the Maples at $6 over. When I sell out of these, I won't be able to get any new 2022s on either of them without paying an arm and a leg, which I really don't care to do. It defeats the purpose, somewhat akin to selling the silver American Eagles, which you rarely, if ever, hear me talk about for this reason. But I think that it's interesting that she passes, and then not only does everything with her likeness on it go up, but so too do all of the other sovereign coins that don't have her likeness on it, just by default. This is what I was talking about, of the micro fragility of this industry. One little event, and it sends reverberations through the industry. This is a little event. What we're talking about is a macro event, which obliterates the supply in a matter of days or hours. And that is what I have been talking about all along when I say the market will be defined by an inability to source product. People say, well, he's got product. He's just talking his book. I can find it. Look, JM Bullion has it. Look, APMEX has it. Sure they do, until that happens. And then no one's going to have it, just like that. And that I can promise you, because if I can't buy new Britannias without paying a fortune, what happens when there's a real event that just makes getting product next to impossible? So lesson to be learned from that, just a little bitty one.
And in addition to those British and Canadian coins that have the queen on the back, you've also got some bars at a lower price point, because I noticed, because premiums have been pushing up on everything, you were trying to still find some things at a low price points. And this particular other product, I remember you had in your case at the Rule Symposium on precious natural resource investing in Boca Raton, Florida, and a lot of people were gathering around your case and were familiar with most of the things in it. But there was one item that was getting people's attention disproportionately because they'd never seen anything like it before.
Everybody loves them. They are the coolest bars I've ever seen, and they are by far the best price in the country. And they are supremely cool. They are the Valcambi 10-ounce bar. They come in boxes of 50, 500 to a box, but they're little itty bitty cubes. Every other 10-ounce bar you find in the market is long and thin. These are so cool. The way they're packaged, it's so neat. I love them. I truly do love them. And I have been buying Valcambi kilos and now these for the last year. It's been my primary accumulation myself personally, because I love the sovereign issued coins. I just have a hard time paying these really high premiums. Look, these premiums on all of these coins are double or more what they've been for my 33-year career. And I just find much better value in these bars. These bars just happen to blow everyone away. Everyone who sees them says, oh my gosh, those are the cutest things. Those are the coolest things. I love them. And they really are. You don't buy things like this because they're cool, but maybe you do. I mean, it can start out as an investment or a hedge, and it become a hobby, and they're fun to look at. So I love these. They're about yay big. They're like a little, like a Dove, those chocolate bars, Dove chocolate bars, like a cube. They're awesome. And my favorite choice right now, by far, of anything that we're selling are these 10-ounce bars.
Yeah, I remember being around your booth there, where people were saying, can I just touch one? Can I hold that? Can I take a look at that? It's funny when people say, can I look at that? They don't mean, can they look at it? They're already looking at it. What they mean is, can I hold it?
No, they're really cool. They're really, really, really neat, and highly, highly recommend them. And so I was glad to be able to secure a nice supply of them and offer them on special this week.
So there were some other questions in the live chat about,
I'll answer them. I got time.
From multiple people about the potential for a U.S. rail strike. We've certainly had a lot of shipping disruptions. There's been ships, actual, container ships suspended. But first, the Chinese locked down their ports. Then they couldn't get into the harbors and in the ports here in the U.S. We've had trucking problems. We've interviewed trucking industry experts. Now it looks like it's going to be the rail system. The major freight rail lines in the U.S. are announcing that they're going to be cutting back because of a pending strike. Just any thoughts from your standpoint on the fragility of the supply chain logistically, and how that affects not just precious metals, how it affects our lives and what we're heading into?
Yeah, it just feels like a planned demolition. We're hearing about perhaps a UPS strike. It's just a planned demolition, and I don't know. It just things just keep happening, and whether it be domestically or offshore, things just keep happening that are breaking the whole system down. So yeah, I mean, look, if there's a rail strike, sure, that's not going to have as profound effect on this industry as it will on the economy at large. But most everything that in this country that goes by truck, much of it goes by rail first, or vice versa. But it would be a huge problem if you start to see more supply chain problems only exacerbate the price inflation. And you have all this money sloshing around chasing little supply pools where, it's getting harder and harder to get stuff. If you see something like this, only making it much worse. I went to look at a car that I was interested in, and I was told it's a 2.5-year wait for it. I mean, what? A 2.5-year wait for a car? This is just more of the same. Again, what is inflation? It is more money chasing fewer goods and services. Well, but that's exactly what we've seen. And this is more of the same thing. If we see a rail strike, if we see a UPS strike, it's just more and more difficulty getting product. You'll see prices go higher. It's just more and more frustration done again. I don't know. It's something that I think is the last thing that we need at this point right now, is a rail strike, and making it much more difficult to get products and necessities to the marketplace. And wouldn't surprise me though, it wouldn't surprise me any more than the fires in all of the food processing plants.
Yep.
And wouldn't surprise me any more than all of the crazy things that we're seeing in this country. Just, you shake your head every single day. And what is precipitating all of this madness? I'm not quite sure, but let's hope that doesn't happen, because if it does, it's only going to make a tough situation in this economy worse.
Yeah, we interviewed Mike Adams, founder of Brighteon, and known as the Health Ranger, on our channel just about a week ago, and couldn't post it here. But one of the things he did talk about was that he said there are multiple suppliers of storable camping food, freeze-dried food, dehydrated food, have been telling their customers for the past year that they aren't able to fill orders because they can't get supply. He said that is not the case, that they were specifically approached by the United States government, Department of State, and told to fill enormous quantities of orders for the federal government, and that that's what they've been doing. That the State Department's been buying up all these storable food supplies, that sort of thing. We've heard about certain state of Washington been stockpiling food. We've heard of other states doing that as well. So from the roots of our channel, from Reluctant Preppers on to now, even now in our tagline, it's awareness, preparedness, and bullion sales. So still awareness and preparedness. Folks, what part of the country you live in and what weather is going to affect you this winter. Whether you have water available based on what part of the country you live in. Whether you're going to, where your food's going to come from. Do you know your local food producers, et cetera? You've got to take those actions now. And Andy was saying, trust your gut earlier and take action. This is not a time for contemplation. This is a time for action. We have a question here from Stephen Fleming. Does Andy see premiums going down as the market goes down?
No, I see premiums going up if the market goes down. And because, especially in this environment, I mean, when the price falls, we do more business than ever, because there are so many people who understand what's happening, who understand that, that this is just overt manipulation. So no, I don't see premiums going down as prices go down. Not at all. In fact, quite to the contrary, they usually move inverse of each other.
In fact, that's the last time we had a huge spike down, and I want to talk about this. Let's zero in on this for a minute. So the last time we had a huge spike down in silver was March of 2020, beginning of the whole COVID lockdowns, everything, everybody kind of panicked, and the whole world was locking down. The equity markets took a dive. The metals markets took a dive. Silver spot price went down to like 11.88 or something like that. And yet you couldn't find silver eagles anywhere for less than $24. So that was like, 100% premium. That's the kind of recent experience that I observed as a broker, but I guess you can comment on that, is that in a time when the markets are getting spooked and the spot price may be taking a dive, doesn't mean you can get physical for that price.
Same thing happened in 2008. And this is when a lot of the realization of market manipulation, this is when I really started to get it. In 2008, the price of gold went from 1,000 to 700 and silver from 21 to 9 in an incredibly short period of time. And when that happened, all the 6 major mints in the world went offline. And The Rand Mint in South Africa shut down for the first time in its 60-year or 70-year history and ran out of product. One wealthy Swiss businessman flew his own 747 there and cleaned them out. The Perth Mint shut down in July or August of that year. The Canadian and the Austrian Mint were working, 3 8-hour shifts, 24 hours a day. And they were, as much as, 4 or 5 months backward. The U.S. Mint was shut down 7 or 8 times in 2008. And everything was, when they finally opened back up, in 2000, or towards the end of the year, rather, when they finally opened back up, the few mints that did, it was 100% premium. With $9 silver, you'd pay $18 for silver eagles and silver maple leafs. But there was an extended period of time where we couldn't get anything. So the price was cratering by 60% in silver and 30+% in gold. You would think that everyone dumped everything that they had onto the marketplace, but it was the opposite of that. The price was driven down and the physicals were gobbled up in a matter of days. And I thought I was going out of business. I truly did. I could not get anything. I've talked about this before. David Morgan rescued the entire industry. David called me and he said, Andy, I got these friends in Washington who they're a company called Pyromet. They've been recycling silver out of X-ray machines for 30 years. They have this massive stockpile of silver. They want to capitalize on the fact that there's no product. And they made these horribly ugly bars that just said 100 ounces. And they didn't even say 100 ounces of what. And so, if it weren't for David, there would have been nothing. But the point of it is, with the price getting creamed, all the product disappeared. And when they finally said, okay, we'll take your order, the US Mint and the Canadian Mint, but you're going to have to pay up front and you won't get your product for up to 8 weeks. It was at 100% premium, 100%. $9 silver, you're paying 17 or 18 bucks to get it. So yeah, I think it is shown, look, if it falls by $1 or $2 and stays there for a while, sure, premiums may come down. But if you see a substantive drop in the price of metals, then yeah, I think, and I don't expect that to happen. But if you do see that, you'll see premiums go to the moon. Look, we're all been told that there's this narrative that when markets collapse, they throw out the baby with the bathwater and they drive down the price or everyone sells their metals to pay off margin debt or to come
sell everything moment. Yeah.
I don't believe that. I never have. I think it's more damage control by the same cartel that's been suppressing the price forever because they want to delink the rationale that people have. Because I'll tell you what, when that happens, when that price gets clobbered, we don't have one person selling 1 ounce ever. It's the opposite of that. So if you believe that this is all done on the exchanges, that these big holders of metal are selling everything to come up with cash to cover their cratering equity portfolios, well, I don't. I think it's a bunch of hogwash. Quite to the contrary, that would be the time they'd be going the other direction. So I think it's about damage control. And it's getting to the point when you look at the fact that right now, let me just find this number here real quick. Right now on COMEX, if I can find, the open interest for silver on COMEX is 1,500% of the registered category. 1,500% of the registered category. That means that if virtually no one would get their physical silver if they tried to get it because it has been rehypothecated by a factor of 1,500%. And so you're looking at a situation where, this is not what's happening. It is not about people selling metal. It's about contracts on the COMEX market controlling the paper price. And so here's what I wanted to, they drive down the price on COMEX, but when that happens, the smart people all around the world start gobbling up all the physical because they know it's a scam.
So here's what I wanted to drill in on this is I've been speaking with couple after couple after couple after couple for over 2 months now. And everybody's talking about sometime in September, October, in late third quarter, early fourth quarter, there's going to be this big bad thing that's going to happen. Everybody's talking about there's going to be this big event. It's going to drive down all the markets. And that's when I'm going to make my move. And that's when I'm going to get my silver because I'm going to nab that low price. And that's going to make up for the fact that my stocks are down by 40% on the year, or whatever it is. And I'm really seriously concerned about those people. You've talked to us for years about how it's less than 0.5%. Rick Rule has talked to us about how it's less than 0.5% of the families. That's not okay with me, for we to have 99.5% of the families in our community, in our state, in our country that are that exposed, that have no shelter to go to protect themselves. And that if so many of these people are thinking they're going to wait for this crash moment and then just scoop up, like you're just going to rush in on a Black Friday and just get all those Tickle Me Elmo dolls, because it's not going to be any mad mass of people trying to press through those little doors of the store and get in there. Can you talk about reality, about what's going to happen? I mean, I guess last week the title of your video was "The Public Will Be Shut Out." So I guess that summarizes it.
It's just being naive. It's being completely naive. You know, it's hurricane season here in Florida right now, and you know, what do you wait until there's a storm in right off the coast of Florida before you buy, you know, homeowners insurance? And no, I think that we're well past that. That would be for the person who already has a nice, you know, position in metals and maybe can scoop it up right away, because there's a very short window when the price drops before the premiums rise, because everything gets gobbled up. Sure. But for someone who doesn't have a position at all, who's waiting for that, is just very naive and is making a massive mistake. And, you know, Dunnigan, and I'm sorry, I got this puppy. I don't know if you can hear it, but I got a puppy who thinks he's a road runner, and I have wood floors, and I hear him coming down the hall and comes into my office and slides in here at about 90 miles an hour. So I apologize if that's
no worries.
distracting.
No worries. We all have our furry friends.
It's like he's like he ate a pound of coffee. I don't know. Anyway, so the bottom line is, yeah, I don't think that that's a wise move whatsoever. In fact, I think it's about the worst possible decision one could make. And it just goes to show that they don't understand this industry. And one of the things that I struggle with so hard, and I probably shouldn't, I should just stop beating myself up. I try so hard to be so genuine, and I can see why people would think he's full of crap. You know, he just wants to push people, you know, through the cash register. That's really not it, not even a little bit. I try to be honest, and that honesty would center around like everything you've ever talked about since you've been on YouTube, preparing before these things happen. You can't do it that way. You'll get clobbered. You can't do it that way. You won't get your product. And who knows how big of an event this will be. You know, why did they impose bail-in and gating legislation? Do they think something really big will happen? Maybe you get locked out of your bank for a while. Maybe you get locked out of your money market. You can't pull your funds out because it's gated. You know, I think that one of these days, you know, there's going to be an event, and maybe it's a major market sell-off that's going to create a lot of problems. I remember in 2020, I told my nephew to call Fidelity and sit in the sidelines. He works for a big company, has a 401k. Called on a Thursday right after things started to get freaky and the market started selling off. And he waited on hold for 2.5 hours. And then an agent came on and said, look, we can't get to you today. Let's book an appointment for you on Tuesday. So, you know, when everyone is running through the turnstile at once, it's not a good plan. And I think you need to develop a core position immediately. And once you develop a core position, then you have the liberty to cost average and pick and choose. It's like buying a shotgun for family protection and waiting for the bullets to go on sale. No, you buy a box of bullets, and then if you want to buy more when they go on sale, fine. Right. But to do it inverse of that is just is foolhardy. It's not, you know, right as you're slamming into a car, you're not calling your Geico agent, hey, I need car insurance. No, it's, you better do it before you get in the car. And that's the exact same thing here. It's a bad mistake to wait for that. And I really do believe that one of these days that won't happen, because when you see the commercial banks net long right now, which I've never seen before, they're positioned to not come in and squash the rally. Let's talk about this for 1 second. What makes the commercial bank manipulation so unusual is that they always short a rising market. Most people who short a market short a falling market. It's falling short it, step on it some more, step on it some more, the price goes down. Think AMC and GameStop. You better have a massive checkbook and you better have a lot of intel to short a rising market, one that has the fundamentals behind it that this one does. Well, that is exactly what the commercial banks always have had and what they have always done. They sucker in the speculation, the price rises, and they short it so much so that it loses momentum and goes the other way. But they've never been positioned that long. So what happens if this time they stand back and instead of going short, they buy more longs? What happens if they just don't do anything and let the momentum of the market rise and this massive managed money short position starts getting squeezed and they have to cover? And the managed money does not have pain threshold. They need to cover. They need to answer to their investors. So they're going to get out as fast as they can. And I think that's probably what you saw yesterday with silver moving up $1, was a little bit of a short squeeze where maybe one of these managed money traders started to cover their shorts and pop, up goes silver by $1. Well, what if it's half a dozen of them? Silver up $6, $7, $8. And what does that do to all the other shorts that were getting squeezed? And maybe this time the managed money gets squeezed and the commercial banks don't come in and short the market to drive the price down again. That's what they've done all these years. They rinse, wash, and repeat. They suck in the speculators, they let it rise, then they sell, all the options expire worthless. They come back in and do it all over again, over and over and over. The managed money are brain dead. They keep doing the same thing. But this time, it's like the managed money capitulated. And this is what we were talking about, coinciding with the nickel market failure on the LME. Maybe this time the managed money said, I'm out, we're done, we're short. In fact, we're not going to just sell, we're going to go short. It's exactly what the commercial banks wanted, allowing them to cover all their old short positions. And now they've repositioned long. If you don't see this as a massive bullish environment, you never will. The question becomes, will they stand back when the price starts to spike higher? One of these days they will. I've always said they'll make more to the upside than they ever did to the down. And when you look at them doing this, it will allow them to not get heat by the regulators for suppressing the markets because, hey, they're actually net long. And, all of us have been screaming for the last decade, why aren't the regulators doing anything about this, very, very concentrated manipulative short position? And now ain't the case. In fact, right now, as a group, they're net long over 5,100 contracts in silver. That's 25 million ounces. So not a lot yet, but well, it is, but not. I think it's very interesting to contemplate, will they not short the rising market this time? And maybe the answer is yes. Maybe they are positioned to ride this out. Why would JP Morgan, according to Ted Butler, amass 1.1 billion ounces of physical silver and 45 million ounces of gold just for the hell of it? Or do they think ultimately the price rises? Why has JP Morgan been net long in the futures market for a while now? Why are the commercial banks and the commercials as a group net long right now while the managed money is way short? We're close. And one of these days, the end of the story comes and the wolf comes. And the little boy, me, who's been crying wolf forever, won't be there saying, I told you so. It will just be, I wish you would have listened to me because it was right there in front of you. And, this is one of these deals where if you're right just once, it'll be a massive life-changing experience. It'll be a game changer. So better to be right once when it matters than to be wrong several other times when, and I have been wrong. I've been wrong because the commercial banks manipulate the market. The fundamentals by which I gauge my opinions have been right. And ultimately, they're rooted in mathematics and in economics and in logic. And those things win out in the end. In the end, the little boy sees the wolf. In the end, mathematics wins. In the end, Mother Nature wins. And I think we're getting closer to that final chapter. And the new book is The Wealth Goes Eastward. And chapter 1 will be the BRICS nations institute a new global reserve currency pegged to gold. That, if I had to guess, that person who called me Moses with the tablets, the third tablet that broke, well, that's the tablet right there that is talking about what's coming next. And I really do believe that is the BRICS nations and this coalition of the East move against the West, and that's when things really start to come into focus. Maybe this is why the big money is taking record possession of metal off of all of the exchanges, the Shanghai Gold Exchange, the London Metals Exchange, the COMEX, and over 100 million ounces backdoored by the authorized participants on SLV in the last 4 months. This is very real.
Speaking of Mother Nature and the mathematics catching up with us, I see we're over time, so I got to call it. But we have one last question. And Anita A says, can we see the pup?
Oh, she'll never, come here, Minnie. She'll never let me pick. She's like grease lightning, literally. And she'll never let me pick her up. She's been going back and forth. Minnie, where is she? Hang on, I'll see if
Minnie is unobtainium.
Yeah, Minnie is unobtainium. We call her Minnie because we're from Minnesota and she's just a little thing. But she's incredible. She's amazing, but is impossible to catch. And every time I try to get her, whether I take her outside or I'm just trying to throw her in the bed or do whatever, she thinks it's a game and I can never get her. Those of you that remember watching, I want to say Rocky 2, where him and Apollo Creed are training, he's trying to catch the chicken. That's what it's like. So I'm sorry I can't show her. Next Tuesday, I'll grab her before we start.
Okay. All right. I'd put you on the hot spot there. All right, Andy, as always, on behalf of all of our viewers and guys, thanks for being so active in the chat. You really make this happen here. We had just a boatload of viewers, 651 concurrent viewers at the moment. It was as high as 800 and some a little bit ago. So just thank you everyone for keeping this real. And Andy, as always, thanks for joining us on Liberty and Finance.
Like I always tell you, Dunnigan, I love being here, and I really do appreciate the opportunity to be here. Hold on, hang on one second. I'm being told she's right here. Where is she? Oh, come here. Yeah, she won't let me get her. She runs away. It's the funniest thing. Hang on, my wife might get her. No, she can't get her either. That's all right. Giving up, exercising. Wait, come here, you little rat. Can't get her.
All right, that's okay. Right. That's all right. Thanks, everyone. We're gonna sign off. Thanks everyone for being here. See you next week, same time, same channel.
Bye-bye.